Back on Morning Trade Live, let's focus on Amazon, the e-commerce and cloud giant reporting earnings this afternoon. More on that in a moment, but let's zoom out. The stock has traded mostly sideways over the last 3 quarters. It's down 3% so far in 2026 thanks to today's move, and down 6% in the last year. We're down 13% from November's all-time high. We're down around 4.5% at this stage, 222 and change. So that's the focus of the morning trade. Joining us for a closer look, as always, is Marley Caden. Very good morning to you, Marley. Going into this, obviously, there's a lot of moving parts. We've heard about layoffs this morning. We continue to look at what they're going to say about AWS. But what are you seeing as far as the numbers and the expectations for this name, given what we've seen as far as the punishment on Microsoft and Alphabet, which you and I were breaking down yesterday?
Yes, good morning to you, Sam. Yeah, let's talk about expectations before we talk about where that potential punishment could come from. For EPS, looking for $1.98. That's about 3 cents better than the previous quarter. Would be about a 5% increase year over year. For revenue, $211.46 billion. That would be up 13% year over year. But you mentioned AWS, a very important metric here, arguably all important metric, expected to top out at $34.9 billion. That would be about a 21% jump from the year ago quarter. Online store sales, those are expected to hit $82.3 billion. That's up about 9%. The advertising segment, that's accounting for an increasingly larger slice of the company's overall revenue, expected to be about $21.2 billion. In Q4 of 24, they saw advertising revenue of 17.3. So that would be another pretty sizable increase there. Also paying close attention, of course, to this CapEx number. We've seen these sort of two camps emerging here, with Meta being rewarded for these higher spends, but we're seeing, Google and Microsoft being punished for their higher spend. So that number going to be a key focus here. As far as expectations, it's expected to be $34.9 billion in the quarter. It was 34.2 in the third quarter, but their CFO came out during that third quarter call and said they were on pace to spend $125 billion in 2025, and they would continue to ramp that in 2026 as they work to meet demand when it comes to AI. So will be very interesting to see which divergent trajectory Amazon ends up in, with how we're seeing Alphabet move today on arguably really strong numbers from Google's parent company. So there seems to be a lot of edge when it comes to that CapEx spend. So AWS, a very, very important metric when it comes to Amazon. But I think that CapEx number is equally important, if not more important, to the price action we're going to see that follows. Also, you brought up a good point. This does follow that layoff announcement. They announced they're cutting 16,000 jobs. They're also closing their Amazon Fresh and Amazon Go stores. So any kind of restructuring commentary also will likely be a part of the call as well.
Yeah, and let's see if we get an update very much on the development of their own chips as well. I mean, not so much nipping at the heels of Google, which is just so far ahead with that, but certainly an interesting race as we start to see more players in this game. Marley, thanks so much. We'll break down these numbers together later this afternoon. Let's trade it now with Joe Tigay, portfolio manager of the Rational Equity Armor Fund. Very good morning to you, Joe. Let's start with Amazon ahead of this report. How are you approaching an example trade for this one?
Yeah, I'm approaching it cautiously. The market environment is dictating how I'm looking at this trade and lots of other trades. Now, important caveat, it's important for me to note I do hold this fund or this stock in my fund, the Rational Equity Armor Fund. I'm a portfolio manager of. So obviously I own it long term, but just the market in general, we're seeing some volatility. I'm expecting some more volatility. I would love to buy the dip on any dip in the market right now. Google, just a perfect example, a very similar company in that they're both in the cloud, obviously very different primary businesses, but they both have experienced a ton of growth in the cloud. People are looking forward to Amazon's cloud business, and Google had fantastic cloud business, and they're showing that the more that they spend, that the more that they make. Very interesting to see, like you guys were just talking about, Google being punished by spending extra money, Meta getting rewarded, Microsoft getting punished. I think the key difference is Meta had an off year last year. People had the opportunity to sell it before the end of the year, do a little tax loss harvesting. Google had a fantastic year last year, wanted to wait till year end to sell it. So that's usually why you see some of this volatility in February. You throw in some geopolitical risks like Iran, and people maybe some dollar concerns too with everything that's going on with the Fed, and maybe people start to overreact to certain things. So that's exactly why I'm prepared for the volatility. Of course, I am in my fund, and I'm ready to buy the dip, and that's how I'm designing this trade in Amazon. Obviously, volatility is elevated today ahead of the earnings. Volatility is elevated in the market broadly. Market's looking for a 7% move on earnings. So I'd be looking to the downside, selling a downside put spread, putting myself in position to buy Amazon if it does fall. Oh, and if it doesn't fall, has great earnings, or the market decides to start rewarding companies for good earnings now, I will be happy just collecting the premium. So right now, or maybe about an hour ago, I was looking at the February 215 200 put spread. That was about $4, probably a little bit more right now. The market has sold off since then. So that'd be what I'd be looking to do as an example trade.
Joe Tigay, always appreciate it. Thanks so much for the example trade today. That is the portfolio manager of the Rational Equity Armor Fund there.